Hey everyone, if you're a caregiver for a loved one with special needs, there's this one huge question that's probably always on your mind. How can you make sure they're financially secure for their entire life? Well, today we're going to break down a really powerful strategy designed to do just that.
So here's how we're going to break it all down. First, we'll start with that core question every caregiver wrestles with. Then we'll get into the actual protection strategy. After that, we'll look at how the policy really works, answer some of your biggest questions, and finally, bring it all together to talk about securing their future. All right, so let's dive right into the heart of the matter. This is the fundamental concern, the why behind all of this planning, and why it's so incredibly important to get started today. And this is it, isn't it? The big question. It's not just about providing for them now, it's about making a plan that provides financial security for their whole lifetime, especially for a future when you're not around to be their primary caregiver anymore. So, how do you even begin to tackle a question that big? Well, the strategy we're talking about today is actually a brilliant one-two punch. It combines two powerful financial tools that work together to create a real, lasting safety net. Okay, so the first piece of this puzzle is where the money comes from. It's a life insurance strategy. And the key thing here is that it's designed from the ground up to fund a lifetime of care without messing up any of those crucial government benefits they might be receiving. It's a strategic way of using life insurance. And that brings us to the second piece, which is just as crucial, the Special Needs Trust, or S&T. Think of it like a protective legal bubble for the money. A trustee holds the funds for your loved one, which is how they can get the benefit of that money while staying eligible for public assistance. Okay, so this is the most important part to get right. It's super simple, but absolutely critical. The life insurance policy is there for one reason, to pour money into the trust when you're gone. The insurance is the funding engine, and the trust is the protective vehicle. That's the relationship. All right, so we get the big picture. But what are the nuts and bolts of the actual insurance policy? How does this thing really work? Let's dig in. First off, we're typically talking about a whole life insurance policy. This is huge. This isn't like term insurance that just, poof, disappears after a certain number of years. This coverage is permanent. It's designed to be there for their entire life, no matter what. Plus, it builds cash value as you go. Now, here's a really cool feature of how you pay for this policy. And it all comes down to this number, 15. What this means is you're often on what's called a limited pay plan. You only make payments for, say, 15 years. And boom, you're done. No more bills, ever. But that coverage, it's locked in for life. It's an incredible feature for long-term planning. Okay, so how much coverage are we talking about here? Well, just as an example, the specific program we looked at provides a policy with this amount. So that 25 grand is the death benefit. That's the money that gets paid directly into the Special Needs Trust. And from there, it's used to pay for supplemental needs. We're talking about things that can really enhance their quality of life, stuff that government benefits just won't cover. And you might be wondering, who is this for? Well, the great thing is, these plans are designed to be really inclusive. They're often available for loved ones with common diagnoses like autism, Down syndrome, and cerebral palsy, along with a range of other conditions. Okay, so that's the basic framework. But I know you've got questions. Let's tackle some of the biggest what-ifs that always come up when people start looking into this. This is a big one. You've got two main choices for life insurance, right? So which one is the right tool for this very specific job? Think about it. Term insurance is great for temporary needs, like covering a mortgage. But eventually, that coverage runs out. The financial need we're talking about here isn't temporary, it's lifelong. So you really need a permanent solution that you know will be there, which is why a permanent policy is almost always preferred. Okay, listen up, because this next part is maybe the single most important detail in this entire strategy. Getting this wrong can completely derail everything you've worked so hard to set up. So here's how it has to work. No exceptions. When the policy pays out, the money must, and I mean must, go directly into the Special Needs Trust. Never, ever name your loved one as the beneficiary. Why? Because government benefits have super strict asset limits. A direct inheritance could get them kicked right off those essential programs. All right, we're throwing around words like trusts and estate plans, so you're probably thinking, do I need to get a lawyer involved here? And the answer here is a hard yes. This is not a DIY project. An experienced attorney who specializes in special needs planning is absolutely essential. They're the ones who make sure every I is dotted and every T is crossed, so that the trust is ironclad and works perfectly with the rest of your plan.
So, we've gone through the problem, the strategy, all the little details. Let's bring it all home. Because at the end of the day, this isn't just about money and legal documents, it's about something much more personal.
I mean, this quote just hits the nail on the head, doesn't it? Life is unpredictable, but a plan like this creates certainty in an uncertain world. It's about buying peace of mind. That's the real product here.
So, we've walked through the whole strategy from the big why to the nitty-gritty how. The whole point of this explainer was to empower you with that knowledge. Which leaves just one final question, not for me, but for you to think about. Now that you know how it works, what's the right first step for your family?